Hi, this is Brandon Wilson, founder of the Wilson Group. Welcome to Financial Strategies for Business Owners, the educational video series that takes you from growth to exit. At our firm, our tagline is grow, protect, exit. In this episode, we will focus on one of the fundamental ways to protect your business through a properly executed buy-sell agreement. According to Forbes, nearly 3 of 4 business owners lack documented succession plans. So what is a buy-sell agreement? It's a legally binding arrangement between owners that governs the situation if a owner dies, is forced to leave the business, or leaves the company voluntarily. It provides opportunities to talk about possible scenarios rather than forcing owners into expensive litigation down the road. Now let's talk about the most common ones. A cross-purchase agreement is when a company shareholder or business partner agrees to purchase the shares of another shareholder or business partner. For example, Chris and Jody each own 50% of their business. They get the business valued, it comes back at $1 million, so they each have $500,000 of stock in the company. To protect that asset, Chris and Jody buy a life insurance policy on the other for $500,000, naming one another as the beneficiaries. The buy-sell agreement also says that if death of a partner triggers it, the proceeds must be used to buy out the deceased partner's spouse or heirs. This avoids having to go into business with a family member of your former partner. That's not always a fun prospect. The next buy-sell agreement I'll educate you on is called an entity purchase, sometimes referred to as a stock redemption agreement. This is typically used when there are more than 2 owners. For ease of understanding, let's just stick with the life insurance example. John, Bill, and Sue are each 1/3 owners of XYZ Logistics. Their business was recently appraised at $6 million. Using the entity purchase methodology, the company obtains $2 million of life insurance on each of the 3 partners. It's important to note that the company owns the policies, is the beneficiary, and also pays the premiums. One day, Bill's parachute unfortunately doesn't open on his first skydive, so now he's a goner. What happens? A distraught John and Sue file a claim. They then receive a $2 million check payable to the company from the insurance carrier. The entity purchase agreement states that the company must redeem Bill's 33% stock interest from his estate, which now results in John and Sue each owning 50% of the company. This agreement has pros and cons, mainly around tax implications if the remaining owners ever sell, so be sure to run everything by your trusted tax advisor. Lastly, I will speak to you about a unilateral buy-sell agreement. This is ideal for the sole owner of a company with a key management group that could run the business if needed. Here's an example of how this could work. Tim is the successful owner of an HVAC company. He has 3 key members of his management team, Charlie, Mary, and Zach. Tim enters into an agreement with these folks to purchase the business if he should die or become disabled. He then creates a separate LLC where he owns 1% of the new entity, and Charlie, Mary, and Zach own the remaining 99%. The new LLC purchases life insurance on Tim and is also the owner and the beneficiary of the policy. If Tim were to pass, the life insurance company would pay a death benefit to the new LLC. The unilateral buy-sell agreement states that the new owners will use that money to purchase the entire business from Tim's widow. Tim's spouse is made whole financially, while the 3 new business partners can now work together to grow the business. This strategy is often overlooked by business owners who don't have a partner. The challenge is usually having the right management team in place to run the business. As we wrap up this episode, here's what I want you to remember. You cannot ignore the importance of having a properly executed buy-sell agreement to protect you, your family, your employees, and their families. As a business owner, your decisions impact many lives. If you still need to get a buy-sell agreement in place or haven't reviewed yours in years, let's schedule a time to discuss this critical piece of protection planning. Scan the QR code at the end of this video to schedule a chat with me. Thanks for watching. I'm Brandon Wilson. Here's to you knowing the right financial strategies to grow, protect, and one day successfully exit your business.